Now we have gotten to one of the most interesting parts of Forex trading. After learning this part, you will be able to discover your own secret formula. Now, what is a support level? A support is a level that indicates where there are surplus buyers. What do I mean? I mean that when the price gets to this point, buyers will send the price back up. If you can draw a support and resistance level very well, you will be making cool profits every day. But note that support and resistance doesn't work well with all currency pairs. But when you spot a currency with support and resistance, just know that you're in the game. That being said, what is resistance? Resistance is just the opposite of support. Resistance is a level that indicates where there will be surplus sellers. When the price gets to a resistance level, sellers are going to punch the price back down. This is just like trading the Bollinger Bounce. This is why I made you learn the working principles of the indicators first. Check the image below for what support and resistance levels look like. This is a clearer image of what support and resistance looks like on a real chart. The green on top is the resistance, while the green line at the bottom is the support. If you spot your support and resistance levels early, you will be able to know when to enter and when to exit the market, which is very good for practicing risk management. How do you trade the support and resistance, you ask? There are two ways to trade, support and resistance. 1, bounce method, and 2, break method. If you remember the Bollinger Bands, you will also remember that these are also the same methods used to trade with Bollinger Bands. This is why I taught you how to use the indicators first. Many indicators were created from price action strategies, and the Bollinger Bands were created from support and resistance strategy. The support and resistance trading works just like the Bollinger Bands. How to trade the bounce in support and resistance. Remember when you learned the Bollinger Bands in the bounce method of the Bollinger Bands? We use the upper band and the lower band. In support and resistance, the upper band is called the resistance, while the lower band is called the support. I repeat, the support is the lower band, and the resistance is the upper band. Note these down, steps on how to trade the bounce. 1. Buy when the price falls on the support and bounces up. 2. Sell when the price falls on the resistance and bounces down. But that is not all. You will need to be sure that the price is really going to bounce at the support level and not just break that level or fake out on that level. We can do this by the use of our candlesticks analysis to confirm a reversal or the bounce. Note that. This bounce method works best when the market is ranging sideways. The second method is the break method. If you also remember your Bollinger Bands, we discussed the Bollinger Squeeze and how to trade the Bollinger Squeeze. I will teach you a lot of methods that deals with a support and resistance line breaking. There is a logic to this. You can use your call level app here also, but it won't work most of the time because a support resistance break might be a fake break. This is why you need to be careful. How to trade the support and resistance break. 1. Buy when the price breaks the resistance. And 2. Sell when the price breaks the support. Remember, I told you there is a logic to this break method. My mentor didn't teach me how to avoid fake outs. I had to learn it the hard way and learn it on my own. There will be times when you try to trade the breaks and the price will break the line, but it will not continue to go up. Instead, it will go up a little and start coming down later. The image here is referred to as a fake-out. How to trade breakouts. There are 3 ways to trade fake-outs. The first way is to wait for the price to come back to the broken support resistance and bounce. This is also called retesting. When it does this in a resistance line, it means that the resistance line that broke became the new support. If it was a support that broke, it means that the support became the new resistance. Remember, it must bounce on that line before you conclude on your entry. The second way of trading breaks is to review your charts and redraw your charts. When you are redrawing your charts, make sure you draw different possible support resistance levels. You are expected to mark your charts with respect to other support or resistance levels. We are doing this to see if the break will hold and go for another support or resistance level. The third way is to abandon the currency pair and not trade at all. Why did I say this? The tendency of a break happening is very low. Out of 10 breaks, 8 are usually fake outs. But in the case of scalpers, they use lower time frames to trade, and in lower time frames, more breakouts usually occur.